In business news, the Nigerian government has spent 3.63 trillion naira on servicing its external and domestic debt in 2022. According to data obtained from the Debt Management Office, the external debt service cost $2.40 billion, equivalent of 1.07 trillion naira at 448 naira, 8 kobo per dollar, while a total of 2.56 trillion naira was used to service domestic debt for the year on the review, leaving April as the highest month with 529.8 billion naira. Recall that Nigeria's total debt stock stood at 46.25 trillion naira as at December 2022. Domestic debt stock hit 27.5 trillion naira and external debt stock stands at 18.70 trillion naira. Following the report by the National Bureau of Statistics that capital importation into the country declined to $1.06 billion in the fourth quarter of quarter four of 2022, the 2022 from $1.16 billion in Q3 of 2022. KPMG Nigeria says the decline in foreign capital importation into the country will lead to further devaluation of the Naira. In its report titled Precipitous Decline in Foreign Capital in Transition Period, the tax audit and advisory firm explains that a drop in foreign capital inflows will increase pressure on the exchange rate. KPMG lists monetary tightening by global economies, low investors' confidence, as well as multiple foreign exchange regime, high inflation rates, interest rates as reasons for the decline in capital inflow, and also poor ratings by Moody's and other credit rating firms. The audit firms advises the country to increase foreign capital for most of 2023, keep the exchange rates from depreciating further, and boost its crude oil and non-oil exports. The Nigerian Electricity Regulatory Commission has launched its service charter in an effort to boost effective service delivery across the country. The charter launched in Abuja is to provide service standards that will guard the Commission in discharging its responsibilities to both internal and external stakeholders. The chairman of NERC, Mr. Sanusi Garba, says the service charter is to promote and ensure investor-friendly industry and efficient market structure to meet the needs of Nigeria for safe, adequate, reliable, and affordable electricity. He also noted that the charter will serve as quick reference for vital information on the Commission's existing limitation and also address subtle issues regarding persons with special needs. However, he reiterates the Commission's efforts in delivering efficient service to clients and stakeholders. Nigeria's population is projected to rise to 400 million by 2050, making Nigeria the third largest population after China and India. For many Nigerians, access to decent and affordable housing remains a critical challenge. The housing challenge is especially exacerbated by the rise in rural-urban migration, which continues to stretch the limited public infrastructure in urban centers, with over 28 million Nigerians lacking access to decent and affordable housing. Mr. Kola Ashirubalogo is the CEO of Terra Developers Limited. He was on our flagship program, Business Nigeria. He believes the private sector has a role to play in bridging the housing deficit gap in the country.
What we realized is that the government has to step in that affordable sector. And it can be policies such as, look, Mr. Developer, you're building a premium development in Lekki. I'm going to charge you 10 million, 20 million or something for this as the government fees. However, I'll waive those fees if you provide X number of units of affordable housing. We're solving the affordability so people are able to get into those houses. So we need to be able to, we need the government to be able to introduce more affordable. The government can't do it all. You know, like we mentioned, the current administration has built over 3,000 housing units, which is commendable.
You see the Federal Mortgage Bank launching houses in collaboration with the NLC, TUC, and all of those things.
Tolu, you mentioned 28 million units. The Federal Mortgage Bank, the Federal Housing Authority, all those institutions cannot solve this problem. They are too small to solve this problem. We need something more audacious. We need something bigger. We need to have bigger targets where, you know, you mentioned 300 million people by 2050. Where are we going to live? You know, so it's quite scary when you think about these numbers, but we cannot continue to look at them as we're talking millions, and yet we're delivering thousands, right? So for us to be able to resolve these problems, we need to start becoming more audacious and attacking this. You need to engage the private sector.
Well, moving on, U.S. stocks reversed an earlier sell-off to close higher today, and Treasury yield steadied as investors digested weak labor market data ahead of a U.S. job report seeking signs the Federal Reserves could pause on rate hikes. Today, market holiday, all three major U.S. stock indexes bounced back, turning green with mega-cap momentum stocks. S&P 500 and NASDAQ finished the holiday shorting week lower after 3 weeks of gains, and a blue chip Dow gained on the week. Labor Department is due to release its March employment report, and market participants will have the weekend to digest the data before Monday's opening bell. U.S. 10-year Treasury yields inched higher following the jobless claims report, snapping a recent series of sharp declines. The global economy is set to grow at roughly 3% over the next 5 years. That's the slowest pace since 1990, according to the head of International Monetary Fund, Ms. Kristalina Georgieva. She says the path ahead is rough and foggy and calls for cooperation to address the problems, especially the low-income countries. The IMF head added that the weakest members of the global family needs additional support from wealthier countries, such as boosting IMF funds to make low-cost loans available. However, the organization is bracing for a wave of requests for help or debt restructuring as the shocks from COVID-19 crisis, the war in Ukraine, and soaring cost of living continues to ring. The United Kingdom's regulator has fined the Chinese-owned video sharing platform TikTok USD about 16 million for a number of data protection law breaching, including misusing children's personal data. The UK's former commissioner office has fined TikTok about $15.9 million and estimated that the video sharing platform allowed over 1 million children under 13 to use its platform in violation of its own rules in 2020. The UK Information Commissioner, Mr. John Edwards, notes that there are laws in place to make sure children are safe in the digital world as they are in the physical world. The commissioner added that the video sharing platform has not done enough to see who, at what age the audience is accessing the platform, and did not take action to remove underage children. Further stated that the fine applies to rule breaches between May 2018 and July 2020.